Hi, good morning, everyone. Good morning, everyone. It's time we did this on YouTube. We engaged. It's been a long while. We had like 2 weeks break. Just a moment. So let me share this around then. Okay. Wow, 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 wow. Okay. We are going to be starting right away. Just a moment. So everyone who have to be here would jump on. Pin. Um, all right. So good morning, everyone. It's such a pleasant one doing this again. So we took a short break for like 2 weeks because of engagements that happened within the last 2 weeks. But I'm back again. I'm back at it again, fully and squarely. So we are going to be diving deep into the chart now and into the market. Let's see what we can do on the chart. Let's see the opportunity the market will present to us this morning to make money. So please, if you are with me on this session, let me know your name and where you are joining and connecting from. Let me celebrate and recognize you in a special way. Then we can fire down from there. Let me celebrate. All right, so let's go there. Let's go there. So, how has the week been for you? How has the market been treating you? Talk to me. Let me hear you. What do you have any challenge in the market? Feel free to ask me that question that you want to get answer and clarity on. I'll be willing to give you the answers that you may want or you may need. So talk to me. Let me hear you. How is the market treating you? And recognize. So let's go there. Let's go there. Do well to let me know where you are joining and connecting from. So let's engage on the chat box first, then we can go straight to the market. All right, so I think I will be going through with the analysis first, then Let's see. Let me analyze this pair that I have on my list. Okay, let me begin to share my screen. So everyone joining, welcome, welcome. I can see you guys joining. I can see you guys. Shout out to you guys. Let's go to the chat. Let's see. Let's know how far the opportunities that the market is presenting to us to print money from the markets. Let's go there. So let me share my screen. Mm, Screen share. Okay, let me start from Euro JPY. So, like, if you have been following for a while, you know that for me, this is my favorite guy. Have any challenge? This is my this is my favorite pair, and I deal a lot on it. So now I'm just going to do an analysis, then look out for the possible move on this pair. So I was actually on this pair yesterday, took a sell position from here, rode down to this point, but I was still holding, hoping that, let me show you something on a 5 minutes time frame, hoping that the market would retrace and keep moving down. But I noticed that it tapped into 61.8, which is my fib level. Normally, I use 61.8 a lot, but because of this level, I felt maybe the market would just make a little retracement, then push down. So I entered another position here. So eventually the market took me out. So went to that 61.8 and started falling. But then it is what it is. Let me take off this so we can have a clean chart to do business. So these ones are over. Let me take off this guy. All right. So let me start an analysis from 1 hour time frame. So if you look at the way the market is aligned and positioned, you can say that now let me do this. So from this point, the market rallied all the way down, retested this level, and this was Sunday evening to Monday morning. The market closed and opened with serious gap. So, and the market just tapped into this level. So this pair works a lot with, yeah, I can say that by experience, support and resistance level. So see how we just tapped into this point and boom, rallied all the way up, and the market got broke this level, retested and rallied again. But it felt to keep going up and started reversing. So by virtue of breaking this level, a retest of it, that's where I entered for a short. So but what I'm looking out for on this pair at the moment, I'm a bit indecisive on what the next move will be for now because of how it is now. So if the market had done this, had done this, then maybe retrace and kept falling. So we can say that maybe this will be the case. But however, we trade what we see in the market, not our imagination. So see what the market is doing, push down, fell to keep going on, pushed up. So took out this level, this low, this came and took out this level, retested, and did not take out this low here. So that means that the markets will be maybe preparing for an upward movement. So now see what we have: up, a little break against this, now retracement. So what I can say is the market is most likely going to keep going up, not falling again. because by structural indication, we can see how the markets have played out. Now, let me take this again. From this point, we had the, the market came to this level, broke it, retested this level, low, high, low, lower low, sorry, lower high, lower low, and the market rallied all the way up, taking out this low here, this high, sorry, and we have this higher high. This is higher low, failed to take out this guy. Now the market is at this point more like an equal high. This so what I may be looking out for is a bounce at this level, then we may be going in for a buy. But however, the market have not gotten to, it has already tapped in, or it tapped in already. Let me mark out this level here. Let's see what happens around here. So this is the point where we are looking to make decision. But the market has already moved, though. There's nothing, this is almost 50 pips already. So for now, technically, there's nothing we most likely going to do on this pair. But let me see if we have an opportunity to enter a trade here. Let me pick a level here. Okay. This level here. Let's see what the market will do here. Let me see. Because I find both long and short opportunities since I trade just few pairs. Now, looking at this now, if this guy breaks this level impulsively, so what we can be looking out for is a retracement like this, then we'll join the market to the upside. So that may be what we may be having on this pair. So this now, if the market rallies all the way up, breaking this minor level, we can now pull out our fib. Let's say we have something like this, pull out our fib. If it bounces, goes up, a retracement, then we can track the movement with Fibonacci too. But for now, there's no technical action that we are likely going to take on this guy. So let's just be more patient to see what happens to this guy. Then we can proceed from there. All right. I believe my analysis is clear enough. It's clear enough. So let me do the next analysis. Let's see how far, if anything can come out from it. Yeah. So this is GBP USD. Let me start from 4 hours time frame. So looking at this, let me zoom in so you can see the structural alignment of this. So this is clear. We have the market rallied all the way, retest up, then splash movement to the downside. Technically, we are looking at retest down. We'll keep falling to the downside. So let's see if the market, or the market is already at this point. The market is already at this point. Let's see. Okay. So this one is simple enough. Bearish perspective on this guy. Let's see if we are going to be entering now, because the market is already at our key level. Let's see. Okay, structure break to the downside here. Let me say I pick out this OB here. Let's say the market comes back to maybe 50% of this 5 minutes OB, and we'll have this. We have let's do 25 pips. Now, so we have a trade here. We have a trade here. Expectation of this trade is 1:5. We have a trade here. We have a trade here. So let me copy out the coordinates. Let me run through the analysis once again. So from 4 hours time frame perspective, see what the market has done. Let me zoom in. So you can see the alignment of the markets push down. Let's say from this point, now we have this move to the upside, breaking this level, retested it by week, went up, tapped in, dropped, pushed down aggressively, taking out this low. So, and you can see that we have a level here. So what we are looking at for is a retest of this, then we move to the downside. And if you go down to a lower time frame, the market is almost at that point. I mean, it have already tapped in, touched it, but we are looking out for it to retrace back to that point. Then we can initiate a position. So looking at this, so we can see how the market has moved. So this is that point. We are looking out for the market to retrace. Then this is just normal break and retest, break, retest, then we can fire down. So on a 5 minutes time frame, see what we have. Now this is that level. The market have retested that level, and we now have this. Let's say the market have rallied all the way. They tested this level. We have low. This is it, and the market moved down. So, and if you trade SMC or you understand it, this is break of structure to the downside, giving us an indication that the market is coming back to this other block that sponsored this break to the downside. And we have something like this. Once the market comes back to it, then we push to the downside. So I have marked out this 5 minutes order block here, and we are now waiting for the market to pull back to it, then we can tank to the downside. So 50% of the OB is good. So, and we have here 25 pips SL. So I won't be saying let's outrightly jump into this trade, though the market is already making some form of movement to the downside. So now technically, if you jump into this kind of sell, into this sell, it may most likely be a trap, because you'll be finding or looking for where you put your SL, and you using like this is 50 pips. It doesn't really make sense to me, because if you use this much as SL, how much are you now targeting? Unless you are doing swing, that is to say you are looking at the market giving you 500 pips, for you to do 1 is to 10, or something like 250 pips for you to even come to 1 is to 5. And you don't know when that would happen. Well, it does happen if you have the patience to wait for the trade. But my setup is not giving me such. So personally, that's not my style of trading. I just like having the best possible small asset that I can have to make sure the trade runs well to my advantage. So waiting for the market to come back to this point is ideal for me. So, but then on the other side, if it does not come back, then so be it. So we won't force anything. So let's just hope the market does this, come back, tap us in for a sell, then we move to the downside. So this is a sell signal here with risk to reward ratio of 1 is to 5. Let me put it on the chart. So the signal is sell limits. Sell limit on GU. Let me copy the as. SL at so SL is 25 pips. So the target is 1 is to 5. So let me take it. Yeah. So you can take a screenshot or you can enter your trade. So this is the analysis for GBP USD. Wow, wow, wow. I can see you all. So let me recognize my people here on the session. Yeah, Mr. Elijah Craftsman. Good to see you, sir. Yeah, Mr. David from Port Harcourt. Good to see you. Good to have you. Yes, Chibuke from Enugu. Good to have you. Good to have you. So we are making progress. Yeah. All right. Oh. Okay. So you can take the screenshots or you can enter your trade. Once I'm done analyzing, I'm going to enter my own position. I don't want to start calculating my risk now. So please guys, do proper risk management. Do proper risk management. So I have the time that I gave out a setup, a signal, and it went all in the direction. And Someone the next time opened up plenty position and lot size, and eventually he hit SL. So it does happen in the market, not because maybe you had one sweet trade and the next one you decide to open up plenty position or you increase your lot size exponentially. No, that shouldn't be the case unless you maybe want to flip the account, and you know what it means. You want to flip the account, so that means that the account is in risk. But if you want to trade um gently and cautiously, so just apply proper risk management across board. So do your proper risk management. I'm very hopeful that the trade is going to be a winning trade. It's going to first of all come back to tap us in, then bank towards our direction. But as I already said earlier, if it does not come back to tap us in, then that's fine. But based on where the market is, we can't jump in for this sell. Let the market complete this pullback, then we are in for the sell. All right. So let me know if there is any other pair that you guys want me to look at. Then I can look at it. Then we can see what comes out from it. So I'm watching the comment section. Let me know any pair that you want me to look at. I'm done with this ones that I look at on my watch list. So let me know the pair that you want me to look at. I'm watching my comment section. So first pair, I will look at it. So let me know the pair that you guys want me to look at on the comment section. I've already done two analysis on two pairs, and we have a signal here on GDP USD. So this is the coordinate here. This is the coordinate. So do your proper risk management. I'm very hopeful that it's going to be a winning position. So let's go. Talk to me. Let me know the pair that you guys want me to analyze. Then I will do that. Let me know the pair that you guys want me to look at on the comment section. I've already done two analysis on two pairs, and we have. Whoa, I can see gold. We have some gold diggers here. The two persons are gold, 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 gold everywhere. All right, let's look at gold. Let's see what we can have on gold. Hmm. Okay, so it's been a while I traded gold, but I have it as one of the few pairs I have on my watch list. So this is daily time frame. Let me start from 4 hours time frame. Now, question is, how is the market aligned? We can see the market is aligned all bullish. I think gold have made a new all-time high again. So let's see. So let's mark this point as the last high the market have gotten to. Let's pick a relevant low. This is like the most relevant, this point. Now, looking at this, so we can see the market got all the way up here as an all-time high on gold, and we have this push to the downside, great move to the downside, taking out this low that we had here, and this is moving up, more like going back up. So it could be a retracement, maybe coming to at some point, maybe drop again. So these are the possibilities that we have on gold. That's on a higher scale. Let me see this level as a resistance level. Let me go down to 1 hour time frame. Yeah, okay. So pay attention to this. Okay, let's see. Let me mark this by a zone. Now, so seeing this happening now looking at gold, we can see how the market have been playing here. This is, let me say, the high technical movements got to this point, retrace, then we have this move to the downside, came back, boom, again. Now the market fell to take out this low. We have this. So the two possibilities that we have here on this guy is it can come tap into this level very well, then make movements, maybe do something like this, then keep moving up. So, but then if you find a trading opportunity at this level, you have to pay attention to the trade. So the market may just retrace a little, keep pushing up, or the market, if the market gets to this point, now we look at the market from perspective of this movement. So you can only speculate, but the market has the choice to do whatever it wants to do. So the market can come and break this level impulsively as though there is nothing on it. Then if that happens, we technically would expect this, a pullback, then a run up to the upside. So let me go down to 5 minutes time frame. But then let's see. Let me try to put a fib level, a Fibonacci to see what and how the market is aligned, whether is aligning to a relevant Fibonacci retracement level. Okay, in between 50% and 61.8. Okay, let's see 5 minutes time frame. 5 minutes time frame. So this guy gold, I won't be doing any sort of pending order here. So, but then let me just analyze the market to you, explain to you my thought process around it. Then maybe during or after the session, as you're on the chart, you would know by my insights what to do as you see what the market prints out. So this point is in between 60% and 51.8. Tracking it with Fibonacci level from this point. Let me mount the fib again. So it's in between 60% and 61.8 and 50% fib level, and very ideal. So what we are looking out for is, for me, I would prefer the market tap into this level where, so which is between 61.8 and 50%. And this is a major key level on this guy called gold. So you can see how the market reacted off on this point. So this is our point of reference. So you see a reaction here, you see the market tapped in here, you see a break here and retest here. So most likely, if this market come back to touch this level, there would be a reaction, and most likely is going to be a fall reaction, making the market or this pair move towards the downside. So, and gold movement is usually very great. This is already 80, yes, 80 pips, 80 pips. So I don't like using too much SL. I'm not a swing trader. So I see some persons on gold, they are doing 300 pips. Like, I don't get, maybe their style of trading allows that. And what they are looking out for is if the market does like 600 pips, which is like technical 1:2. So if you position well and maybe using a fair SL, which the market, if it moves in your direction with that 300 pips, let's say you do 50 pips SL on gold, then the market moves 300 pips. That's like 1:6. Fair enough. Not doing 200 pips to catch 300 pips. I don't like that style of trading, sincerely, personally. So until the market gets to this point, I won't be taking any action. So if the market gets to this point, then I can consider an action to take. So that's if the market gets to this point and gives a bearish engulfing, then I can, let me see what 50 pips looks like. I'm going to mount the fib to, I would be more comfortable to have this 50 pips be above 61.8 level. I'm not sure it will, but then let's see. Let's see, let's see. Let's see, let's see. This is this is it. Okay. No, 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 no. No. Let me remove it. Where the 61.8 is far. That's like 150 pips. So the thing is, I will just be patient for the market to come to this point, tapping to this level. It hasn't tapped in. So if the market taps in into this level, then I can look out for a reason to take any action. But primarily, my bias on this guy is for a movement, a reaction here first, and a movement to the downside. But on the other hand, if the market keeps coming up with pressure, a lot of buying pressure, it's best for you to observe and see what happens. So if it's coming with a lot of pressure and coming close to it, coming close to this area with that same pressure, most likely is you do as though this level does not exist. And once it breaks it, then you know that the sell sentiment or the sell bias that you have has been invalidated. Then we can start looking for what next the market can likely do, then that can infer an action to take. So I'm hopeful that if this guy comes to this point, then gives us a bearish engulfing candlestick pattern and it starts falling. Technically, this is our TP. This is our TP, and it makes sense for a trade. This is 1:14. So even if we maybe expand our SL to, just to be fair enough, 70 pips on gold, it's still a good trade. 1:12. Very fair. Very fair. So you can take a screenshot of this. Let's see how the market plays out. Take a screenshot of this. Let's see how the market plays out. So remember, don't do anything yet. Let the market come back and come to this point, this level, then give you a confirmation for an entry, then you move. But for now, please do not do anything yet. All right. Okay. Someone is typing. Okay. Let me see. Comment section. Okay. Mm. No, no, no. I didn't say 5 pips. I said 50. 50 pips, not 5, sir. If price pushes past that point above, it will jump up and stop hunt. The price will drop down to your target, but would most likely wipe your account, wipe you out. Okay. Trump tariff was going up, gold is safe haven for everyone right now. So I don't see gold dropping at all. Well, that's your take on it. Is fine and welcome. So, but for me, based on what I see on the market technically, I'm holding to what my bias is. But then, as I already said earlier, that until the market comes to this point and gives you a reason to sell, then you can sell. So if you remember, I said if we, okay, let me check 30. Let me track what you are saying. 3700, 3070. Let me check. Let me put this. Hmm. hmm. You see it. So this is like 170 pips on gold. Well, if that's working for you, well, good and fine. You can stay with it. But for me, I usually do not. My stop loss on gold. I do trade gold. My stop loss on gold usually do not get up to 100 pips. It does not usually get up to 100 pips. So, but then I'm just sharing to you my bias on this pair gold. So I know that the market has been somehow this period, but you can't conclusively say that the market will not maybe make a retracement, because this is a retracement here, and some people made money from this point. Ehen. So let's see what happens. So for now, there's no action that you are most likely going to take until the market comes back to this level. Then, if it gives you a bearish engulfing pattern to show you that it's time for the drop to the downside, then you can enter. But then if that does not happen, you just let the market do whatever it wants to do. So we only analyze the market, speculate, but we trade the market based on what we see, right? I believe that's it. So that's it. So that's that for gold. Mm, all right, let me go back to the charts. Okay, GU, not yet. He hasn't come back. So let me look at Euro AUD, the last one before we move. So I know some of us in my private community that made money from Euro this morning. Said Euro dropped massively. So, based on the type of trader that you are, let me check this movement. This is wow, enough. 241 pips is great. 240 pips. So if you are doing 30 pips SL, that would have been almost 1:8. 1:8. Very fair enough. Very fair enough. So now, looking at this guy, Euro AUD. So let's say the market got to this point as the highest point in the market. So now, zooming in into lower time frame. So I think this is the reason why they were able to catch this move and capitalize on it. So looking at it, market structure. So we have rallying all the way up. This is, let's start from here: low, high, low, high, low. Then this, the market came, retraced. Then we have this breaking to the downside, taking out this low. Now we have the market coming back to this point. So this point is now serving as a resistance level, and you can see some sort of rejection around this level. You can see some sort of rejection around this level, showing that the market, the pressure on the buy side have come down. The sells are now in place. So you can see these rejections here, all around here. So this happened around, yes, 4 a.m. Yeah, 4 a.m. So seeing these rejections at this point, so I think that's the reason why they entered the cell and it ran beautifully. So let's look at what is most likely going to be the next possible move on Euro AUD. So let's see. Now, this is a point where we can now pull out our fib tool. So looking at this movement, you can see again that this is aggressive push to the downside, and this level, which is like the last low, has been taken out. If this happens, so most likely what we'll have the market do is retracement to a valid Fibonacci level, retracement level, then a push to the downside. So let me mount a fib tool. Let's see how it's been aligned to the current market movement. So this is 5 minutes time frame. Let me put this. So week to week, week to week. Okay. So you can see it's, let's say, from this point, let me draw out a zone. See the touchings we have around this level. So we are looking out for the market coming to this point. Then we can look for possible actions to take. Let me take off this fib. Now, looking at the markets, you look at the markets from this perspective. Where is the market and where is the market most likely heading towards? First of all, know where you are on the market, where the market is, then where is the market heading towards. So we have spotted that this is splash movement to the downside, and what the market is doing is some sort of retracement going to this point. So we can now say that the market is pulling up. Now the question is it possible for us to find a buying opportunity within this movement as the market is rallying up? So if you look at this, what's the pip? How many pips is this? Okay, this is about 60 pips. So let's see if there can be a buying opportunity around here. But then if there is not, it's better for you to just leave it and wait for the market to come to a vantage point where you can take action and capitalize on the market movement. So, but most of the time, when the markets have shown you sign that this is an outright retracement coming back to a point, if you have a point or a level to key into the movement, you can collect some pips if the ROR will make sense. But if it will not make sense, you can just leave it and look for a better aligned opportunity in the market. So for now, you can't be considering to buy this guy because where you are going to put your SL is going to be an issue. So you won't do an SL of 60 pips to catch 60 pips movement. It's not wise, it's not ideal in the market. So the best for now on Euro AUD is for you to wait for the market to come back to this point. Then that can give a sell signal then we'll enter the market for that. But then for now, just hold on and see what happens to this guy. All right, this is 11 a.m. So let me attend to question. Do you have any question for me whatsoever? So ask your question, then we can call it a day. We have a pending order on GBP USD. Any question? Any question? All right. So everyone on this session, please do well to subscribe to this channel. Do well to subscribe to this channel. Do well to subscribe to this channel. So this is the place we'll be ending this session. Till we meet again, till we interface again on this session. Keep enjoying and keep making money from the forex market. So we are going to be ending the session right away. So cheers, guys. Do enjoy your week. Have a great trading week ahead. Bye, everyone. So this is, hold on, before we, okay. Mm. So you can now enter your trade if you have not done that. So this is the place we'll be ending this session this morning. We are about 7 to 10 persons on this session. So this is the place we'll be ending this session. So till we interface again next week Wednesday, keep enjoying, keep making money from the forex markets. Wish you all a great trading week and a great trading month ahead. Bye and peace out. So